The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's
that.
very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Happy Monday. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you. Feeling much better. Thank you very much. Rough week last week. I couldn't make it through half of Thursday's show. Had to pull the ripcord, as it were, and took Friday off as well. So appreciate your patience as I get better, but took the weekend, relaxed, and really am feeling much better. So thank you for, again, the patience last week. Back and ready to have at it. The phone number, 877-927-6648. You can catch my show every day, 5 days a week on TFNN from 3 to 4 Eastern, right in front of the Tom O'Brien Show from 4 to 6. You can pick up my show as a podcast on iTunes if you can't listen live, and very easy to listen to TFNN on your smartphone. A lot of people like to do it that way. Plug those earbuds in. Open your smartphone browser, type in tfnn.mobi. You can listen to the stream that way as well. And don't forget about Tiger TV. That is also viewable on your handheld device. All you have to do is open your smartphone browser, type in tfnn.com, and then over on the right you'll see a little box with some, electronic portable devices in there. Just click that. It'll recognize what device you have, and it'll start streaming on your cell phone. So if you're listening at your PC, you can watch my show live on Channel 1, and it is archived on Channel 13. With Tiger TV, of course, you can look at charts right along with me. So let's look at the S&P 500, see where we're at here with about 50 minutes left to go in Monday's session. S&P 500 not looking too bad at all here after a bullish move last week, bullish breakout for the S&P 500. Over a key resistance level. You can see the S&P 500 is flirting with those. Let me get this out of here so we can see the bottom of the chart. There we go. You can see the S&P 500 is flirting with that September high. Wouldn't be surprised at all to see a little shakeout here. Maybe we come down to 1450, 1445, something like that, in preparation for an upside breakout. But right now, the S&P 500 down a little more than 6 points, 0.4% to 1460. Checking in on the NASDAQ Composite. Its technical picture is equally compelling. You see a bullish gap up for the NASDAQ last week. Look at this. Look at these price declines occurring in lighter volume. Seeing a very modest, mild shakeout here. NASDAQ Composite well off its session lows right now, only down 7 points to 3,094. And the Dow. Finally check in on the Dow Jones Industrial Average here. It is down 56 points, 0.4% to 13,379. So this market not doing anything wrong. You know, the bears are out there talking about, what is inevitably going to be going on in Washington over the next several weeks. The deficit, painful spending cuts, what's gonna come of it all. Will there be a debt downgrade? Right now, all we need to be focused on is price and volume in the major averages, paying attention to the leadership that the market is serving up. The Ultimate Growth Stocks model portfolio currently has 7 long positions. All of these positions have been initiated since November. I've had a few recent ones taking advantage of this newfound market strength. And, I still have a short position open that is working out very nicely today. I never closed the short position because the sole stock that I am short right now, a former market-leading growth stock, even during renewed signs of strength in the market, its downtrend remained intact. So I was patient with it, and the stock is underperforming dramatically today. So we are definitely slanting bullish here, but I am open to, an occasional short here and there, especially when it comes to stocks that look like they are breaking down to me. Right now, volume on the NASDAQ at last check was tracking pretty close to the level we saw Friday, which was pretty much average at 1.7 billion shares. We're tracking just a little tiny bit below that. Volume on the New York Stock Exchange tracking pretty close to what we saw Friday, which was light at 648 million shares. We're tracking about 5% higher than that right now. The 10-year note currently at 1.9%, 30-year bond at 3.1%. I wanted to take a look at a chart of these bond yields with stock charts here. You can see bond yields have really taken off. You actually had a breakout. Money comes out of the bond market into stocks. You can see the yield on the 10-year note last week was all the way down to about 1.7% thereabouts. So it's been a pretty big rally in bond yields. Slightly lower today, the 10-year note, and the same with the 30-year as well. Let's take a look at the chart of the 30-year bond, and we'll see. Let's see here. TYX, there it is. Yeah, similar looking chart to the 10-year, 30-year bond right now, about 3.1%. And I'll tell you, I have to agree with the people. I've been hearing this more and more, that if bond yields continue to creep higher here, money comes out of bonds and yields continue to head higher, you have to respect what that could do, from a bullish standpoint when it comes to the major averages. If that 10-year yield eventually gets to that 2%, which is a psychological level, and starts to break out above 2, you never know what could happen. The money comes out of bonds, it continues to flow into stocks here. So I think it makes sense to slant bullish for now. Of course, we've got fourth quarter earnings season right around the corner. Not much in the way of earnings today. There was one company that reported earlier today, actually a pretty strong performer, Commercial Metals. Very extended here after a recent breakout over $15 a share. It is up 4.4% today to 1622. So a good solid day for commercial. And this is a company that beat the bottom line estimate of 17 cents by a wide margin. Earnings were up 40% to $28.79 billion. That was a little bit below to mine because the stock, again, up 4.4% to 1622. Don't forget, tomorrow, everybody's interested. COA comes out with earnings. I say the same thing. It's really kind of an irrelevant stock at this point. People will say, well, we want to know what demand for aluminum looks like going forward, and Alcoa underperforming today, down $1.12 ahead of earnings tomorrow after the close. They are expected to turn a profit of 6 cents a share compared to a loss of 3 cents. Sales down 6% to $5.6 billion. Probably just going to be a ho-hum earnings report, but certainly Alcoa will get a lot of play after the close tomorrow. Okay, February gold. Let's take a look at February gold. Settled at $1,646.30 an ounce, down $2.60, 0.2% decline. Wanted to take a look at the GLD here because, even though the market is in an uptrend, there are some really ugly charts out there, and I got to tell you, this GLD is looking more and more tired here. I think the chances for more downside, frankly, outweigh the chances for upside from here. Some will say it's getting oversold, but technically, it is very, very weak. GLD today down 92 cents, 0.6%. Look at the weekly chart here for the Spider Gold Trust chart with the 10-week and the 40-week moving average. Look at the stiff resistance here provided by the 10-week. So this tells me that in the near term, the GLD could easily pass underneath 150, 149 in that area, but the GLD, we'll see how that plays out in coming days. The U.S. dollar down today a little bit, bearish on the dollar here. Again, just looking at the technical U.S. dollar index, like I said, right now trading at 80.26. So it's got another ticks to go or so to get up to that 200-day moving average. Looks like it could be resistance for now. So the path of least resistance, the Financial Select Sector Spider Fund. Financials in the news in spades today. You can see the XLF, good breakout right alongside the major averages last week. Probably a little bit extended up here at trading last at $17 a share. It is down 5 cents today. Bank of America is the fourth largest weighting in the XLF. Let's check in on BAC. Certainly has been the leading financial stock. Also very extended after a recent breakout over $10 a share. News with Bank of America today. They reached a big settlement with Fannie Mae to the tune of $10 billion related to mortgage loans originated by Countrywide Financial and Bank of America National Association from 2000 through 2008. So Bank of America unfazed on the news. I think a lot of people were expecting this, down 2 cents to $12.09. And in related news, let's take a look at NationStar Mortgage Holdings, NSM. They agreed to pay $1.3 billion to buy $215 billion in residential mortgage servicing rights from Bank of America. Big move for NSM today. You can see a gap up, technical breakout in spades here for NSM. Really encouraged by the number of heavy volume upside breakouts that we've been seeing in the market in recent weeks. The more you see of them, the easier it is to feel good about the prospects for additional strength for the major averages. So nice heavy volume move for NSM. And let's also take a look at Walter Investment Management, WAC. This company is paying $519 million to Bank of America for loan servicing rights. It is gapping up today over $46 a share. This one, you can see the base it's been forming since late October. Doesn't look all that extended to me, frankly. It's up 9.7% today to 48.33. Would seem like a counterintuitive buy. Buying a stock when it's up 9.7%. I do not own this, but to me, this looks like an early stage, possible early stage base breakout for Walter Investment. So a lot of movers today, lots of headlines to get to. We'll do that. We've got a lot more show coming up, so stick with me. Ken Shreve with you, back in the saddle. Again, nice to be here. Breakout Investing on TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure, 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you. Did not mention at the top of the show that I hope you will all join me for my first webinar in 2013 at TFNN. It's going to take place 1 week from Thursday. Thursday, January 17th at 6:30 p.m. Eastern. We'll go for about an hour or so. This webinar will be free for subscribers to my Ultimate Growth Stocks newsletter, as well as subscribers that are taking a 30-day trial. So paid subscribers and also people that want to check out 30 days free of Ultimate Growth Stocks will be eligible to join me for the webinar Thursday, January 17th at 6:30 Eastern. So be sure to sign up right on the homepage of TFNN.com. Webinar is titled 2013, A Year of New Leadership. Among other things, I'm going to talk about stocks that I have no interest in owning in 2013. The common trait among many of these names is that they've had their day in the sun already. They've already made monster gains since the start of the bull market in March 2009. But I think there's a whole new group of stocks with leadership potential. We're going to talk about those. We're going to talk about how I go about adding a stock to the Ultimate Growth Stocks model portfolio. My newsletter is weekly. It comes out every Tuesday, so my next update is coming out tomorrow morning. And in between updates, you don't have to wait 7 days to hear what I'm talking about, because in between weekly updates, I send out email buy alerts, sell alerts, and general market updates for the model portfolio. So 30 days free of Ultimate Growth Stocks right on the homepage of TFNN.com, and availing yourself of that, you'll be able to attend the webinar on January 17th. So please do that. The recent breakout last week for the financial select, Goldman Sachs made a lot of positive comments about the financials. They are, certainly a good source of leadership in the market right now. Goldman Sachs on Friday put Citigroup on its conviction buy list, but about the number of extended stocks out there. I mean, there are a lot of stocks that have moved a long way in a short amount of time. A name like Citigroup, currently trading around 42, 47, a recent breakout over 38, I would not get it extended to me despite positive comments Friday from Goldman Sachs. Goldman Sachs also cut their rating on J.P. Morgan. Again, this all happened Friday, but I thought it was noteworthy. J.P. Morgan still looks good here. Recent breakout over 44. This one doesn't look as extended to me as Citigroup, because you had a little high, what's called a high handle area form, little low volume shakeout here and a recent breakout over 44. J.P. Morgan right now trading at 45.44, so doesn't look too extended to me. J.P. Morgan also upgraded SunTrust Banks, which is STI, to buy. They reiterated a conviction buy on Regions Financial, RF, and they also downgraded Wells Fargo and BB&T to neutral from buy. Wells Fargo, I believe, is reporting earnings this Friday. Let's take a look at the chart for Wells Fargo. This is just a classic example of what a base looks like. The stock is in position for a possible breakout over $35 a share. Certainly not extended. It's building a base. The question is, will earnings on Friday be good enough to spark a new round of institutional buying in the stock? If it does happen, and big buyers come into the stock, heavy volume breakouts, buying heavy volume breakouts in a market like this that is frankly acting right is not bad practice. So can't rule out a breakout for Wells Fargo. We'll see what earnings look like from this company on Friday. Didn't go over February crude oil. It was up 10 cents, not much movement today. Finished at $93.19 a barrel. Wanted to take a look at some of my favorite names in the oil and gas space. Ensco, based in the UK. This is a driller. Really like the technical picture of Ensco. The stock today down 28 cents to 62.45. Let's take a look at a weekly chart for Ensco, and this is where it really looks compelling here. Recent a big breakout last week, and not extended here. So a lot of stocks that have just, the train has left the station. I think Ensco could still be in the early stages of a move here. Some other energy names, we'll talk about those when we come back. Always appreciate you tuning in, folks. Ken Shreve with you, Breakout Investing on TFNN. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break-even spreads, and spreads used to hedge the underlying market. Today, to get your 2-week free trial to Daryl Martin's diagnostic, valuable information it can provide when trading.
You're looking for a precision edge in the market, something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter. Each week is what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns, Larry, harmonics, and powerful Bradley stock market model that Larry utilizes for less than $5 a day. Profits for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind, and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone. Indices staging a little rally here into the close. Good to see here. Dow well off its session low, down only 38.5 points now. 0.3% decline to 13,396. Stack virtually unchanged here. Impressive performance by the tech index. Down less than a point to 31. The S&P 500. Well off its low as well, down close to 4 points to 1426. JP Morgan doing a healthcare conference, pretty big healthcare conference in San Francisco today. Let's take a look at Celgene. Monster move by Celgene, of course, mostly known for its flagship drug Revlimid, which is used as a treatment for multiple myeloma, a type of blood cancer. But Celgene, beautiful breakout today, over $82.78. Remember, this is a stock that normally trades 2.8 million shares a day. Volume today close to 7 million shares. So anytime you see a big volume spike like that, you know there are some big buyers in there, not just retail investors driving the price higher. CEO Robert Hugen gave a pretty bullish outlook for the company, not only in terms of future revenue growth potential, but also talked about new drugs in development. Hugen said that Celgene should report product sales of more than $6 billion in 2013. That number is expected to double by 2017. Hugen also touted the company's experimental drug Apremilast. Some of these drugs, boy, they're tough to pronounce, but I think I got it there. Apremilast, which has shown early efficacy in the treatment of psoriasis. Celgene plans to file for FDA approval in the second half of this year for Apremilast. So a lot of good news around Celgene today. Nice breakout for the stock, over 82.78. Also take a look at Amazon, AMZN. Amazon having a bullish day today, trading up near its session high, up $10, 3.9% gain for Amazon. Last 269.16 for Amazon. Big volume in the stock today as well, as institutional investors are fueling its move. This is a tough one here. I mean, it is breaking out over a swing point of 263 today, working on a 4-session winning streak going into today. So, last week this was a $245 stock. So it's moved a lot, but to its credit, it is a technical breakout in heavy volume, and that is definitely bullish. Amazon did get an upgrade today from Morgan Stanley. They also raised the price target on Amazon to 325. So Amazon normally trades about 3.4 million shares a day. Volume today 4.1 million. So let me just make sure I've got that average, because I thought volume was a lot heavier than that in Amazon. Yeah, 3.4 million. That's what Amazon trades on a normal day. So volume started off very heavy in Amazon. Now, it's not all that great, really. 4.3 million shares now, so above average, but not nearly as impressive as the volume that Celgene is seeing today. Didn't really get a chance to, I was out Friday, of course, didn't get a chance to talk about that jobs number. I thought it was sort of a Goldilocks number, not too hot, not too cold. Non-farm payrolls were up 155,000 in December. Unemployment rate at 7.8%. I thought it was a number that was just right for the market. A number, if 200,000, 225,000 jobs had been created, that would have just kind of cemented what we heard in the Fed minutes last week, that hey, this era of easy money by the Fed and quantitative easing. Remember, a lot of members are thinking about ending that towards the end of 2013, if not beforehand. I mean, on the one hand, that's sort of a vote of confidence in the economy. So if we had gotten a much better than expected number, who knows? The market may not have liked that. It's a bit counterintuitive, because we all want to see the economy, grow faster. We want to see more jobs created. And if we had gotten a very, very disappointing number, well, then that would have fueled fears about just a weak economy, weak GDP growth, weak corporate earnings. So the 155,000 number was just right. For all of 2012, 1.84 million jobs were created by the economy at an average of 153,000 jobs a month. When the U.S. economy is firing on all cylinders, growing at a minimum of 3.5%, you're normally seeing, a minimum of 225,000 jobs created a month. So we're still below that, but hopefully it will improve in coming months. Taking a look at shares of Netflix today, got to give this stock credit. A lot of continues to see buying demand. Netflix up another 3.7% today to $99.49. It hit an intraday high of $101.75. First time Netflix has been over 100 since April, I believe. Company inked a deal with Warner Brothers Television Group that will basically bring complete previous seasons of current television shows produced by Warner Brothers to Netflix next year. So Netflix has been busy doing a lot of content deals. They recently had a big deal that the market applauded with Disney. So buyers continue to come into Netflix. Take a look at Athena Health here, trying to get back above its 200-day moving average. The company announced a small acquisition today. Athena up 2.3% to $78.10. Athena is a provider of tech services for the healthcare industry. It's going to acquire Epocrates, EPOC, a provider of mobile services for physicians. Small acquisition here, almost $300 million in cash. The deal values Epocrates, EPOC at $11.75 a share. Check in on EPOC and see that it's trading right around that deal price, $11.69, up 21.5% on the day. Mentioned 2013 being a year where we're going to see some of these new issues in recent years really start to perform. Got to give credit to Solar City. This is a pretty speculative company. They're on pace to do about 140 million revenue in 2012. They came public. Came public in December at 13. They came public December 13th, I should say, at $8 a share. It is now trading at $16.05, up 11.5% today. Here's the deal. 4 investment banks initiated coverage of the stock today with bullish ratings. Goldman Sachs, Bank of America Merrill Lynch, and Needham started the company with a buy rating, while Credit Suisse launched coverage with an outperform rating. Interesting, all 4 of these investment banks were involved in the underwriting process for Solar City. But, some optimism about fundamentals going forward, earnings, sales growth, Solar City is not profitable yet, but they do show good top-line growth in recent quarters. Solar City installs solar energy systems to residential and commercial customers, and again, they should do about $140 million in revenue in 2012. Get a little sip of tea here. Much better. Take a look at shares of Apple today as well. Apple continues to, be in the headlines here. Another a price target cut today, this time by Barclays. Stock is down $4.18 to $522.82. Working on three straight declines here for Apple. Again, that 553 level looks like it's going to be meaningful resistance in the near term, and even if it does get above that, that 595 level also looks to be significant resistance as well. But Barclay cut its price target to 740 from 800 today. I don't know why it is that people are so afraid to say bad things about Apple. I've been pretty vocal in recent months. Apple used to be a holding in the Ultimate Growth Stocks model portfolio, but I exited the position completely in late September, early October, and we had a 7,500 point gain in the stock. I was perfectly content to take a short-term profit in Apple because I was starting to see signs that big investors were unloading the stock, and that's a key part of my my selling strategy. If I have a profit in a stock and I start to see supply and demand trends turn negative in a stock, start to see signs that big investors are unloading shares, I will sell that stock and lock in profits or protect capital, whatever I need to do. And again, that sell in Apple was back up here in late September. It was right around $675 a share I sold it at. I just don't see, looking at its technical picture now, I just can't envision the stock doing much in 2013. At best, it may be able to keep pace with the S&P 500, but if you're looking for outperformance, I would not look for it in Apple. So that stock just does not have any interest at all to me right now. All right, mentioned earlier in the show about the risk, the danger. When I look at the market landscape and I look at the number of growth stocks out there, there are probably more extended stocks out there than there are stocks still within buying range. So be very careful about chasing performance out there. 3D Systems making another big move today. This is just a perfect example of an extended stock. Recent, breakout over $48 a share thereabouts. Last trading at 60.76, up another 3.3% today. Working on 6 straight price gains. So this is a perfect example of a stock that you do not want to chase up here. Another company, FleetCor Technologies. These are all great companies that most likely are going to give you a more palatable entry point, maybe the next market pullback. FleetCor is going to eventually come down to a near-term support level. It's 50-day moving average, right around $50.50. But at $55.62, this is another extended stock that you don't want to chase. Yahoo got a downgrade today. Not a meaningful downgrade. I think it was downgraded to outperform. Don't remember who downgraded it, but again, just a stock you don't want to be buying up here. It recently went over $20 a share. $18.50 where it's 50-day moving average. That's a likely support level. Maybe a nibble down there, but wait for it to come down there, and most importantly, see if it finds support. If it does, much more palatable entry point for Yahoo. Then there's Qihu, Qihu. Qihu on the NASDAQ. Another stock, very extended here. Recent breakout over 28. You had a few different breakouts here. You had a breakout over 25. Then you had another breakout over 28. It's working on 6 straight gains as well here. Last trading at 32.50, up 2.6% on the day. Don't want to chase this one. How about shares of soda? SodaStream, interesting product. You can make your own soda at home. look at the major reversal in this stock with some volume here, down 3% to 47.22 after hitting an intraday high of 49.98. So nothing worse than getting caught in a reversal like this, but no one should have been buying soda today after the move it's made. It had a breakout over 43, had a breakout over 45, just another extended stock. So definitely want to be careful of chasing her. Hopefully you're in some names. You've been in some names for a while where you're starting to build some nice cushions. You can be a little patient here. Shares of Illumina taking a hit today. Illumina gaps below its 50-day moving average, down close to 7% on the day to 51.01. The story here is that Roche Holdings chairman Franz Humer told a Swiss newspaper that a deal to buy Illumina is off the table for now. Illumina initially scoffed at Roche's hostile bid of $44.50 a share in January 2012. 1 year ago, Illumina also said no to a sweetened $51 a share offer. So Roche says no go for now. Illumina taking a hit today, down, like I said, close to 7% to 51.01. Lulu under renewed pressure here. This is another growth name that looks high multiple growth name that looks vulnerable here. Gap down for the stock on Friday. Down another 80 cents today to 71.15. I believe Friday the stock was downgraded to neutral from outperform at Credit Suisse. I think that was a downgrade Friday, which is why it gapped down. Might have been today, but either way, Lulu under quite a bit of pressure over the past 4 trading sessions. And then fellow retailer, another high multiple name here, really an outstanding operation here, Ulta Beauty. Gap down for the stock on Friday. Total sales in the 7-week holiday period from just before Thanksgiving to the end of the year rose 23% from a year ago. Same-store sales, though, only up 7.4%. In the year-ago period, same-store sales were up 12.6%. So growth starting to slow a little bit at Ulta. Possibly stock's been under a lot of pressure past 2 days. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you. Reasonable performance by the market today. The Dow right now down 46 points, about 0.3% to 13,389. Nasdaq Composite down close to 2 points to 3,100. S&P 500 down close to 5 points to 1461. Mentioned volume tracking pretty close on the Nasdaq to what we saw on Friday, which was pretty much average at 1.7 billion shares. Same with the New York Stock Exchange at this point, tracking very close to Friday's level of 648 million. Nice, powerful breakouts today, particularly in shares of Celgene. Positive news out of the J.P. Morgan Healthcare Conference in San Francisco today. Amazon also making a nice move, good, solid breakout. Volume good, but not great for Amazon. What was interesting is this stock had traded about 2 million shares during the first hour of trading. And again, Amazon normally trades about 3.4 million shares, but volume has really quieted down as the session progresses. But still, good solid breakout for Amazon. Mentioned also, just be careful not to chase stocks that have run too far, too fast out there. In the healthcare space, I think Varian Medical Systems is still an interesting stock worth watching here. Good day for Varian, up $2.46 today, 3.4% gain to 75.18. Had a nice recent breakout over 72.61, so typically don't want to chase a stock when it goes more than 4 to 5% past a swing point. So Varian still probably within range here, but not by much. It's working on 4 gains in the past 5 trading sessions, but good volume in Varian today. This is a company that makes oncology systems and equipment used in radiation therapy. Google at last check was underperforming today. Let's see what it is doing. Yeah, not doing too bad here. A little breakout for Google last week over 738. I think the swing point for Google was 738.28. Right now the stock, not quite there yet, 734.40, but Stock underperforming a little bit today, only down about 0.5% on the day. I think it was last week that Google announced a settlement with the FTC that will give Google competitors more access to patents and advertisers more flexibility to use rival search engines. So Google's still not looking too bad here. Is it a stock under meaningful accumulation? No, I don't think it is. So this Google would benefit from renewed signs of institutional buying. And so we'll see. We'll see how Google looks. Also got to respect LinkedIn here. LNKD, another stock I think has the potential to do well. Surprised it hasn't moved up to this point, but technically, it's hanging in there. But I got to tell you, this is this. The technicians will call this a handle area forming in a cup with handle pattern, but typically this is kind of erratic price action. So haven't given up on LinkedIn yet, but this one still looks a little bit sketchy to me. Not the best looking of handles, and you want to see volume dry up as a handle area forms, and there have been some kind of higher volume declines here in the handle area. So still keeping an eye on it to see if it can clear resistance over 117, 118. Good growth prospects at LinkedIn, but looking a little questionable here technically. After the close, we're going to hear from earnings from Team, TISI, and then tomorrow before the open, Monsanto, Schnitzer Steel. Then after the close, Alcoa and Global Payments. That's Tuesday, and then on Wednesday, interested to see what PriceSmart has to say. This is a company that looks a little vulnerable ahead of earnings. Coming up next, the Tom O'Brien Show. Thanks for tuning in, folks. I'll see you back here tomorrow, 3 o'clock Eastern.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.